I'm Kyle with Fundamentals of Finance, and I'm super excited to tell you about one of the biggest investment themes for the next 10 plus years, which I'll call the next industrial revolution and how I'm investing in it. You've heard about the first industrial revolution, right? In the late 17 and early 1800s, the inventions of the steam engine and machinery revolutionized how companies were run and had an impact on almost every aspect of people's daily lives. That was the foundation for everything from the creation of factories and mass production to modern capitalism and economics. Well, I think we're entering another revolution kind of like that. It could last decades and it'll impact almost every aspect of our daily lives. Two themes, the green energy transition and re-globalization, are going to create massive growth opportunities for all kinds of companies. But industrials are likely going to be some of the biggest beneficiaries. Just to level set, what exactly are industrials? Well, to oversimplify a bit, most of them are companies that build stuff. Examples include companies like Boeing that makes airplane engines, Caterpillar construction equipment, Daikin heating and AC units, Rockwell, which is industrial automation technology, and then a few are companies that bring that stuff to where it needs to go, like shipping companies and the railroads. These might not have the sex appeal of new digital meme stocks like Meta or Netflix, but then again, those companies have been looking more like Jabba the Hutt than Angelina Jolie lately. Being sexy or exciting or popular doesn't make something a good investment. As an investor, you always have to keep looking forward. And looking forward, these look like some of the most attractive long-term opportunities to me. So let's start with the green energy transition. Regardless of where you stand politically on the issue, it's going to require trillions of dollars of investment, and that makes it a massive investment opportunity. Conceptually, we're making a revolutionary transition from paying for resources like electricity, oil, and gas as we go to being able to harvest free resources from places like the wind or the sun. But in order to get there, it's going to require a ton of infrastructure investment. And who's going to build that? Industrials. If we're going to have a lot more EVs, we're going to need a lot more EV charging stations so we don't end up with lines like these. Industrials will be the ones to build them. So where's all that extra electricity going to come from? Well, things like solar panels. We're going to need a lot more of those. Wind turbines. We're going to need a lot more of those. Both are made by industrial companies. But no matter how many solar panels and wind turbines we have, there's still one problem. Solar only makes power when the sun is out, and turbines only make power when it's windy. So what happens if you want to use electricity at night when it's not windy? Well, we're going to need a lot more battery storage and better electric grids to get energy where it needs to go. Who makes those things? You got it, industrial companies. We won't just be finding ways to produce cleaner energy though, we'll also be finding ways to use less of it. Everyone focuses on EVs, but dollar for dollar, the most effective way to reduce emissions is actually to improve air conditioning efficiency. To put it in perspective, it's estimated that by 2050, replacing refrigerants in AC would reduce global CO2 emissions by more than twice as much as if every single person in the US gave up their car. For colder climates, we'll also need more energy efficient heating, and for all climates, we'll need better insulation and more energy efficient pipes. The list goes on. And how about re-globalization? What I mean by that is that after Trump's tariff war, COVID-19 supply chain disruptions, and now further shortages from the war in Ukraine, a lot of companies are looking for ways to diversify their supply chains. Maybe make things in two places instead of one, or get their supplies from two places instead of one. This might not be the most efficient or profitable path, but these three events have made it apparent that security and reliability of supply and production are as important as efficiency. But if you're running a company and you're building a new factory in a place where it costs more to produce your products, like maybe it's in a country with higher wages, you're going to want to save on costs wherever you can, right? That means the most efficient robots and automation technology for your new factories, more solar panels, and more efficient building construction. The walls, the roofs, and the machines in the factory, the way it's heated and cooled, the steel and concrete used to build it, the electricity that powers it, the cars people use to get there, pretty much everything will be made more efficient in one way or another. Industrials are involved at every step of the way. That is why I believe they're such a good long-term investment opportunity. As far as timing goes, we're at a point where a lot of them have already gotten a lot cheaper. Some industrial companies are what's known as cyclicals, which don't typically do well in recessions. Hence the sell-off over the past few months as more and more people have began to price one in. Could there be more weakness in the short term if we have a recession? Sure. Could some of the European ones get hurt if Russia cuts off their gas supply? Yes. But the beauty of thinking long-term is that you can look at big picture trends like the ones we've been talking about and tune out all the short-term noise. Yes, there could be more downside in the short term. There always could be. But is the war in Ukraine or US interest rates going to stop the green energy transition? I think not. And on the other side of a recession, if this higher inflation environment persists for a few years, the pricing power, strong balance sheets, and reliable growth opportunities that many of these companies have could serve them well in that kind of environment. So to invest in these companies, I've started with a small position in iShares Global Industrials ETF with the ticker symbol EXI. My plan is to start small and add more if it keeps selling off on more recession fears. As of early July 2022, it's already fallen more than 30% since its high in November. And for companies that aren't typically that volatile, that's kind of a lot. You can never reliably predict short-term timing. No one in the world can do that. But it does feel like a solid entry point to me, and long-term, I think a lot of industrial companies are ripe for another revolution. And if you really want to learn how to invest, check out my free webinar below called The 9 Habits of Successful Investors. The link is in the description. Thank you for watching, and I will see you in the next video.